So right here, there's your break. See it staying above VWAP. There's your payoff. See it?
Does that happen at 7 also, Coach?
Yes. Every hour on the hour, a new brokerage opens up, but 8 is the biggest one.
Got it. Thank you.
So does everybody see how we can use VWAP though to trade with? Here's another example. Of course, this one popped, but look, here's VWAP. It stayed above because there's two principles behind this, right? We all know if it's above VWAP and it stays, isn't that bullish?
Mm-hmm.
So wouldn't it be great to always trade right on the line because you already know exactly where you cannot allow it, which means your risk is the smallest it could ever possibly be? The biggest indicator in the stock market, I've said since day one, is what indicator?
VWAP.
If it's above VWAP, what should you be looking at?
Long.
Why?
Because the VWAP is your support and it's going to move up.
That's right. Isn't that a bullish sign if it's above VWAP?
Yep.
So if that's the case, and we know that it has to stay up there, wouldn't it be a great idea to buy it off the bounce of VWAP and then have your stop just below it? So yes, stop is always below VWAP. Again, it's not bullish if it's not above it. Then it's bearish. Why are we longing it, right? So you already know, get out. To the upside, how do we collect to the upside? Shave, 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 shave. This is pre-market. This is not regular day. At any point, it can go knife drop, right? I'll take a couple cent move, get the hell out. Why? Because when you're holding 20,000 shares and it makes this kind of a knife drop, that's $1,000, right? Maybe a little more. Same here. Same here. And if you were foolish enough to hang out here, when I said 611, 612 was your cutoff, I told you guys this morning too. If you were still here like, I don't know what to do, right? This is $3,000 gone. See it? $2,200. That's a $2,200 negative move right there. So the other thing is, and then I'll get your question and then we got to go. But the other thing is when you're in bigger, okay, in the pre-market, to me, this is how I use the strategy. The bigger I go in pre-market, the less time I need to be or want to be in the trade, because the higher the size you're in, two things go against you. Number one, it takes longer to sell because I was way over the standard level 2, meaning the size of quantity to buy in and get out, which means it's going to take longer to get out. Number two, if a knife drops on you and then you have to sell, you will cause it to go lower because your amount is so high. So the bigger the position size, the less time you need to be in and inside a pre-market. If you're holding 10 shares over here, you can ride it till the cows come home until it doesn't make sense anymore. Collect your money because these little moves don't do anything. You can get in and out in under a millisecond. That makes sense?
Can you explain real quick, when would a flip to a bear market? What kind of attributes do we look for? Is there a time period? When, you know, when
this, let me show you. You see this right here? This is SPY. You can tell the overall entire market based upon SPY. Remember, I gave you guys this.
Right.
So this is your trend line. See it here? You can see a clear, definitive reversal from here, right? Well, as soon as it broke this channel, right? You guys remember when we did this back in the day? March, February, right here. I said, if we can break this channel, right? You're in a whole new level. Otherwise, I told you back then, this would have continued to ping pong down following the same trend line. See it?
Got it.
It broke the channel right here. Boom. There's your bullish market. Big pop. Now look. Now what once was resistance, the top, is now clearly support on the bottom, and then it bounced. Do you see the difference?
Got it. Okay, so I'll focus on that. Okay.
Yep.